Okay, here's a real head-scratcher for you. You've got two tech giants, Meta and Microsoft, and they are both pouring billions upon billions of dollars into winning the AI race. But after their latest earnings reports, Wall Street treated them like they were from different planets. So what on earth is going on here?
I mean, just look at this contrast. It's night and day. After their big announcements, Meta's stock just took off, soaring more than 9%. Meanwhile, Microsoft's stock went the other way, tumbling 10%. Both companies are completely all in on AI, so why the wildly different report cards from the market? Let's dig in.
To really get what's happening, you have to understand that we are smack in the middle of a massive, unprecedented AI spending spree. Big tech is locked in what you could call a high-stakes arms race. They're in a dead sprint to build the infrastructure that's going to power our future. And believe me, they are spending an absolute fortune to get there first.
Just how much are we talking about here? Well, some experts are predicting that the biggest tech companies could spend a combined $700 billion on AI infrastructure. And get this, that's just this year. It's a truly mind-boggling amount of money.
You know, for a little while there, all a company had to do was say the letters AI and their stock would just fly. But as the spending hit these crazy levels, the rules of the game totally changed. The era of the blank check for AI, that's officially over. Wall Street is now banging on the table, demanding to see a payoff.
And this quote from Jesse Cohen over investing.com, man, it just nails the mood perfectly. There's this massive tension building between the huge, long-term AI dreams of these companies and the short-term demands of investors who are basically asking, that's great, but what have you done for me lately? Patience is definitely wearing thin.
And that brings us right to the core idea of this whole explainer, what we're calling the payoff paradox. It's the new, unwritten rule on Wall Street. Spending billions on AI isn't enough anymore, not by a long shot. The market is only going to reward you for that spending if it is immediately backed up by strong, clear, and measurable growth in your revenue.
So let's see this paradox in action. It's time to put our two titans, Meta and Microsoft, right under the microscope to understand exactly how this played out. This table really tells the whole story in a single glance. You see the crazy stock reaction at the top, but the why is right there in the rows below. Meta came in with this huge 24% revenue growth, and they could directly connect their AI spending to better ad targeting. For Microsoft, revenue growth was still pretty good, 17%, but the return on their AI investment was, well, a lot fuzzier, and that made investors see all that spending as a growing concern.
And this chart just drives the point home, doesn't it? That 7-point gap between Meta's 24% and Microsoft's 17%, that is the entire story. In the world of mega-cap tech, a gap like that represents billions and billions of dollars, and it creates this powerful story about momentum that either thrilled investors or, in Microsoft's case, absolutely terrified them.
So what exactly spooked Microsoft's investors? Well, it really boiled down to a few key fears. Their cloud business was growing, sure, but it wasn't growing fast enough to make sense of a massive 66% explosion in spending. That squeezed their profits. And on top of that, investors were getting nervous because the promised revenue from new AI tools like Copilot just wasn't really showing up yet. They could see the money going out, but they couldn't clearly see the payoff coming in.
Now, just compare that to the story with Meta. This is why Wall Street was popping the champagne. The returns on their AI spending were totally tangible. You could see it. Those AI-driven ad improvements directly fueled that 24% revenue growth. They even predicted that growth would speed up next quarter. So when Meta also said they were going to spend a boatload of money, investors didn't even blink. Why? Because they could see the spending was paying off. Right here, right now.
Okay, so all of this high-level Wall Street drama has real-world consequences, especially for everyday investors like you and me. I mean, if you were holding Microsoft stock and you wake up and see it's down 10% overnight, what do?
This question from an investor on Reddit just gets right to the heart of the dilemma. It's perfect. It captures that internal fight we all have, the fear of missing out on future gains versus the fear of losing the profits we've already made. It's probably the most essential question every single investor has to face. So one popular strategy is the long-term hold. The basic idea here is that if you believe in the company's big picture vision, you just got to ignore the short-term panic. As one user advises, you only sell when your main reason for investing has changed, because at the end of the day, time in the market beats timing the market.
But then you have the counter strategy, what's often called trimming your position. This is all about protecting what you've earned. You don't dump your entire stake, but you sell off a piece after the stock has had a nice run. The logic, as another user puts it, is pretty simple. You never go broke taking profits.
So here's the crucial point. The story of Meta and Microsoft isn't just about one bad or good quarter. No, it has fundamentally rewritten the rulebook for investing in the entire AI revolution. The game has changed for everybody.
So let's break down this new rulebook. First, massive spending. That's not impressive anymore. It's just the price of admission to compete in AI. Second, Wall Street's patience has officially run out. They are not writing blank checks anymore. Third, companies have to show the money. Tangible, here-and-now returns are mandatory. And finally, and this is the big one, revenue growth must outrun spending growth. If it doesn't, you're going to get punished.
And all of this leaves us with a pretty provocative final thought. This AI spending spree is only getting bigger and faster. As all the tech titans continue to pour billions into this race, you have to wonder, which one of them is going to be the next to face judgment from Wall Street's new, unforgiving playbook? The payoff paradox is really just getting started.